Welcome back to the Liquid Math channel, where we use AI-powered market analytics for crypto investors and to those who wish to learn about crypto market analytics. As of December 14, 2025, Folks Finance is trading near $24.54 after one of the most extreme moves in the altcoin market this month. The Fear and Greed Index sits at 27, signaling fear, yet Folks recently surged from under $3 in November to nearly $49 intraday today, before violently pulling back. This isn't just volatility, it's a textbook example of how narratives, sentiment, and structure collide and where most traders misread what's actually happening. Folks Finance is a DeFi capital markets and lending protocol, originally built on Algorand, now expanded cross-chain through its exchange system. The Folks token is deployed across multiple chains, including Ethereum, BNB Chain, Avalanche, Arbitrum, Base, Polygon, Algorand, and Sei. Its pitch is simple: unified liquidity and lending across ecosystems. Its market behavior, however, is anything but simple. Let us look at price and volume. Let's anchor to the data. Over the past month, Folks moved from approximately $2.52 on November 1 to $24.54 today, an 872% gain. In the past 7 days, price doubled again, from about $11.09 to over $24. But the critical event occurred early this morning. At 4 o'clock on December 14, Folks printed a local peak near $48.61, followed by a 50% drawdown within hours. Volume peaked after the price peak, not before, which is a subtle but important clue. And with that, let us look at Folks from a few new angles. Angle number 1: this was a blow-off, not a breakout. Most people see the pump, but what they miss is the path. A rally that gains hundreds of percent and then immediately retraces half its value usually signals distribution, not healthy trend continuation. This suggests early participants exited into strength while late buyers absorbed volatility. That's not weakness, but it is instability. Angle number 2: volume confirmed the top, not the trend. Peak volume at nearly $200 million arrived after price topped. That tells us participation increased as price fell, not as it rose. This pattern often means late buyers chasing, shorts covering, and early sellers exiting. Many traders misread high volume as bullish. In reality, context decides whether volume is fuel or friction. Angle number 3: sentiment is extremely hostile. Let's look at the most recent YouTube comments. Words like rug pull, shorted, and disbelief dominate. This is not euphoria, it's distrust. Here's the non-obvious insight. Markets rarely top when sentiment is hostile after a drawdown. They top when optimism survives weakness. This doesn't guarantee upside, but it does increase the odds of violent reflex bounces. Narrative is altcoins are dead, this is a rug, short every pump. Meanwhile, reality is that price moved from $2.52 to $48.61 in weeks, liquidity showed up, and the market already punished excess with a 50% reset. The mismatch tells us this market is arguing with itself, a hallmark of transition phases. And now the Liquid Math Market Pulse Index, LMMPI. The Liquid Math Market Pulse Index, LMMPI, is something that I created with the help of AI, and what it does is that it scores the coin from 0 to 100 based on price structure, sentiment, macro pressure, and hidden signals. 0 to 20 is extreme risk, which means panic conditions and a high crash probability. 21 to 40 is defensive zone, means that fear dominates. And there are only high-risk setups. 41 to 60 is neutral zone, which means that the market is undecided and choppy with mixed signals. 61 to 80 is constructive zone, which means that data favors continuation. This area holds the best risk-reward ratio. 81 to 100 is overheated zone, is strong trend but growing blow-off risk. Today's LMMPI score for Folks is 54 out of 100. This reflects strong momentum history, extreme instability, fearful sentiment, and peak-style volume behavior. This is a high opportunity, high-risk regime, not a trending one. Now let's see some risk map. Base case is that Folks consolidates after the blow-off, likely chopping between the mid-teens and high 20s. Upside path is if price reclaims $30 and holds it with controlled, rising volume. Continuation toward the $38 to $45 narrative zone becomes possible. Failure mode is if price loses the low 20s with panic volume, odds shift toward a deeper reset into prior structure in the mid-teens. The most likely outcome over the next 1 to 2 weeks is range building, not trend chasing. Focus is no longer in discovery, it's in digestion, and digestion is where discipline beats excitement. This has been the Liquid Math. If you found value in this hidden signal breakdown, subscribe for more LMMPI updates and data-driven crypto analysis that cuts through the noise.